Hey there, this is the Mortgage Minute. My name is Ryan Skaggs. This channel is dedicated to everything mortgage, real estate, and interest rates, and we're going to dive into those interest rates first. So, 7 straight weeks of interest rates rising. Check out that link below to Freddie Mac's average 30-year fixed. They put out a weekly survey. Absolutely great way to follow along with the market and see where interest rates are moving. While you're down there, hit that like button, hit that subscribe, click that bell icon to be notified as I'm putting out weekly videos on the channel. Today, we are going to talk about mortgage points. Now, I'll link a video below or above there where I did and I talked about the definition of. So I'm going to skip that part today. So definitely check that out if you're not familiar with what the calculation and how it works. But really, the reason for the video today, or the genesis of it, is that many lenders are quoting rates at the top end of their rate sheet, meaning the highest rate they could potentially offer still has points. That was never the case until we kind of get into this market that we're currently in, and for a host of reasons, and I won't necessarily get into all of them because they're quite technical in terms of the the securitization of the mortgages and the rate sheets and compression and all these different things. But for you as a potential first-time home buyer or looking to purchase a home with a middle to lower credit score, you will potentially see a rate that could be higher than your expectations and have points associated, because literally some lenders can't even offer a higher rate to reduce the cost. So they're probably, to some of you out there, there's probably never been a time in terms of the last 5 to 10 years where the cost associated, on the closing costs associated, were at this high of a point. So it's something you definitely have to consider and look into. That doesn't necessarily make it a bad time to buy. I continually talk about housing prices and how they typically follow inflation. When you look at the overall chart, they're following inflation. As we all know, inflation is just sky high right now. Even if inflation comes down to just 2, 3, 4%, that usually means that housing prices are still increasing by 2, 3, 4%. But if you have that middle to lower credit score, so what does that exactly mean? Well, you have to talk with your lender. You're going to have to apply to get credit qualified to better understand what exactly that looks like. But you could see a rate in the 5s and the 6s potentially and have points. And you could go back to the lender and say, well, do you have any options without paying this? And they could say no. I've been doing this for 10 plus years. I don't ever remember a time that the rate sheet looked like this, where the top end, where you say, okay, here's the bottom end, you could pay this much to get down here, or it could give you this in the middle, or it could give you a credit up here, right? I could give you a couple $1,000s if you took this rate up here. Well, guess what? The top end, you're still paying for it. So you need to understand your closing costs. You need to get a quote. You need to get multiple quotes. Second opinions are free, guys. This is your absolute, likely largest asset and largest liability up to date. So be educated, get a second opinion, better understand options that are out there. Understand what your lender is quoting you and what the fees associated are going to cause for you for your cash to close. So this is Mortgage Points. Again, that video before that I did up front. Check out the channel. I've got the Mortgage Minute playlist here that'll come up, and click that subscribe button. I would be honored for the opportunity to keep providing you weekly content on the mortgage, interest rate, and real estate market. So my name is Ryan Skaggs. Thanks so much for tuning in. Have a great day, and we'll see each other again very, very soon.